Thank you for joining in BQ Conversations. I'm your host, Neeraj Shah. Our guests today are the men who manage the listed investments for Temasek India, Vishesh, Shrivastav and Mohit Bhandari, both of them managing directors of investment at Temasek, join us right now on the show. Gentlemen, thank you so much for taking the time out. Really appreciate your time. I'll start off in the alphabetical order. Mohit, let me start with you. How do you guys look at the India opportunity currently? Because when I look at what Temasek owned were in value terms in India relative to what it is right now, obviously the investments have grown in value. I presume the actual cost of or the investments at cost also would have gone up over the last few years. And everybody that I speak to seems to be believing that India is the perfect place to be in. So please tell me, how do you guys look at this opportunity?
Neeraj, firstly, thank you for having us on the call. No, but you're right. We are very constructive on the India story, both in near term and long term, and that reflects in the increase of our exposure in India, both in absolute terms and, in fact, more interestingly, as India's share within Temasek globally. But I think the reasons why we are constructive or so excited about India is broadly well understood, which is the long-term secular trends of demographics, rising middle class and rising income. But I think more importantly also, we are seeing the benefits of various policy measures and reforms that have been undertaken over the last few years, from GST to IBC to the digital stack. And we therefore are excited about India. Of course, we are bottom-up investors, and therefore need to find opportunities that tie in with the structural trends or the mega trends, as we call them. But many such trends are playing out in India, be it rise in consumption, be it digitization, formalization, and so on. And therefore, the desire to step up our exposure in India.
Got it. Vishesh, could you come in? I mean, to your mind, I mean, the opportunity is well discovered, well documented as well. And there is a lot of knowledge which is common folklore. Do you look at this slightly differently than the rest, or one doesn't need to do that because the rising tide in all probability will carry all boats and you only have to choose the first amongst the equals?
So Neeraj, I think the proof of the pudding is in the numbers, right? So just augmenting what Mohit said, right? 5 years ago, India's salience to Temasek was about 3% of the global portfolio. Last year it was 5% of the portfolio. This year it's 6% of the portfolio. Clearly, we are putting our money where our mouth is, I think basis the opportunities we are seeing in the market today, we believe that from investing an average of $1 billion, $1.5 billion on a gross basis per year, in the next 3 years we can maybe triple our pace of deployment. Now, obviously, it's subject to us finding the right opportunities and subject to us, getting approvals for the right opportunities. But the intent is very clearly there for all the reasons that Mohit mentioned. Now, to your question of is this a rising tide lifting all boats, or is it a more nuanced view? I think what gives us the confidence to put our monies where our mouth is the fact that we've been present in India for 19 years. We've had a portfolio that has performed really well for us. The embedded value in the portfolio today is significantly larger than the 6%, which is a $17 billion US number that we publicly disclose. I think more than that, I would just say that we are more bottom-up investors and not so much top-down driven thematic investors. So literally every investment opportunity that we assess, that we prosecute, has to compete with other opportunities elsewhere in the world, right? And to that extent, there are always pockets of overvaluation. There are always pockets where the risk reward is not commensurate to opportunities elsewhere in the world. But with that caveat, I would say that the demographics, the macro, the policy environment, all of that puts India in a fairly strong position as we view it from here.
Vishesh, I like those numbers. I'm just trying to understand when you're talking about upping the size, and since you guys manage listed investments, are we talking currently about listed investments alone, or would it, straddle the whole opportunity chain? Because having you on the cap table is great for private players as well. So are you including that within this investment landscape, or only listed?
Yeah, so I wanted to correct you when you introduced us. We don't manage just the listed part of our portfolio. We manage the entire portfolio. Roughly, 60% of it today in India is listed, but 40% is unlisted. And that's because, we value the way we account for our unlisted portfolio is that it's at cost till there is a liquidity event, right? If we mark to market our unlisted portfolio, it would be a, significant step up from the 17 billion overall in India that we spoke about.
Yeah, I'll just take the luxury of asking you one question out there, Vishesh, then get back Mohit into the conversation as well. But this whole unlisted piece in India seems to have really come of age in the last 4 years relative to what it would have been in the previous 4 decades. Maybe Bangalore is the, so to say, the focal point for everybody, not to say that other cities are not. Just trying to understand how high is the excitement level there, and is that a sign of bubble is too extreme a term, but is there a sign of caution there, or do you believe this is just the start from your prism?
I would say, Neeraj, that I believe it's just the start, right? And when we talk about unlisted investments, there are multiple buckets, multiple asset classes that we are talking about, right? So right from early stage growth investments, right? For example, today in our listed portfolio, we have Zomato, we have Policybazaar, we have Cartrade, we have Devyani, we have Medanta. They were all private investments when we first came into these companies, right? So, so that is clearly one asset class which I believe will continue to grow quite well. There is another asset class, or a class of investments in the private space which are very mature, almost, buyout type situations. So, for example, we own almost 40% in a large IT services company called UST. We've deployed more than $1 billion into Schneider Electric in India. And these are, mature companies, can list anytime they want, but for various reasons, have chosen to stay private at this time. They will probably be contenders for the public markets at a later date. But that's another, large class of private investments. And if you look at what our peers are doing within India, the buyout market has become much more active. This is something that we've, taken a first step in India with our acquisition of Manipal hospitals. And that, as you know, is a, $2 billion plus check for us, right? So clearly there are more opportunities getting created. And, just to repeat what I said, I think this is just the beginning. We're going to see a lot more.
Music to the ears. Mohit, come in. There is a whole chatter of how it's not just listed equities and private equity investments, but India is coming of age on the alternatives in a big way as well. Just love to understand how you guys think about that side of the curve as well, if at all you're thinking of it.
So, Neeraj, by alternatives, we do have we do believe in the partnership model. So we do have investments with some funds, usually to fill in some, I would say, capability gaps, or where they bring some additional edge and value.
Okay.
If I may say, a couple of them as an example, NIF, which is the National Infrastructure Fund. The other one is our, you may say, joint venture, or along with InfoEdge in the startup ecosystem, where they perhaps go a series or two earlier than what we would pursue. So we do look upon partnership model as an important engine, especially as we need or as we desire to scale up our presence in India. So that's, and we're doing that globally as well. And there are learnings that we are now using for India.
Got it. Mohit, the other aspect is a point that Vishesh made, right? That all of your checks that you write have to compete with an equal opportunity on the global scale. And I would believe that's a mix of the growth that other opportunities give versus the valuations that they are trading at. Now, the common refrain that I get from a bunch of global guys is that while India is the place to be in, they are maybe a bit cautious on the valuation aspect. How do you guys think about it? Because the bulls are saying that India has always been expensive. It will not become cheap and therefore we are buying that growth. Whereas the cautious ones are saying that, hey, it's a cycle. At some point of time, it will come back to means and we are waiting for that. How do you guys think about this?
So, Neeraj, you're absolutely right. The trade-off is between valuations that you pay, which is premium to other markets, versus the growth and the runway for growth. So not just growth for the next year or 3 years, but the long-term growth. And to the extent that we can underwrite a long-term growth, so sustainable growth, in certain cases, valuations do make sense. So I would agree. I would argue the answer lies. We're strong, very constructive on the India story, and to that extent, long-term believers. But you have to be discerning and choose either the company that you back at the valuations that make sense for you, or the time at which you invest in the listed space for the kind of returns that we seek to solve for. So I think that to answer in a different way, yes, you cannot just go and buy at any price. India definitely is a higher growth market, but you also need to be patient.
And in which case, Vishesh, I presume that your argument or your comment about bottom-up investors becomes even more relevant currently, because in an expensive market, you still probably find bottom-up opportunities that compete well with global options, even as on a relative basis, India remains expensive compared to others.
Absolutely. And even if you look at the headline index, right, it may be trading at a certain valuation, which today is about one standard deviation above 10-year long-term average. But within that, there are many components. So, today I would argue that IT services is not as expensive as it was about a year ago, or financial services are not as expensive as they were prior to COVID. And then obviously there are some pockets which are overvalued relative to their own trading history. So it's always, a mixed bag. And our task as active investors, as bottom-up investors, is to find the right opportunities and stay invested for the long term.
Interesting. So you obviously, your investments, Vishesh, show that you guys are constructive on BFSI. Your own answer shows that IT services also forms a part of that. You probably have I know you have existing investments in BFSI, maybe in IT services too. The question is, if there are fat checks coming your way currently and you are deploying them, are you comfortable doing them in these pockets, or are you looking out for other options? Because necessarily the opportunity needs to be large enough considering the bracket that you come in from.
Yeah, so maybe I'll just, to answer that question, I'll just take a step back and explain how we think about our portfolio in India, right? So, globally we invest behind 4 key themes, right? One is, clearly digitization, which we are seeing great, evidence for in India. And that's driven by, the India stack. So UPI, digital identity, account aggregation, now ONDC. All of these are going to create opportunities for businesses to grow, become more efficient, engage with their consumers much more. And tech and consumer as a sector translates really well to this mega trend. The second mega trend that we are investing behind globally is obviously rising consumption. And, India is the epitome of the consuming market, right? Because more than 60% of our GDP is made up of consumption. Our per capita GDP today is, at an inflection point. Most other geographies have shown that, the journey from 2,500 GDP dollars of GDP per capita to 5,500 GDP is the one that creates the maximum value for discretionary consumption, right? So that's very clearly translating into the consuming, sector in India. The third mega trend we invest behind is increasing lifespans, and that translates really well into our healthcare portfolio, right? So healthcare services, which includes hospitals and diagnostics, pharma, biotech. So that's the third trend. The fourth trend, which we are very actively scouting for in India, is sustainable living, and that translates into carbon efficiency, clean energy transition. These are spaces that we've begun to explore in India. So, for example, we have investments in an electric vehicle maker. We have a platform which generates renewable energy. Schneider is a automation and product company for distribution of renewable energy, and we are looking to do more, right? So these are the 4 things that we invest behind, And these are areas that that we will look to deepen our portfolio, as well as look at specifically on the sustainability side, look to do more.
Okay, so Mohit, come in. I mean, a bunch of opportunities in the fourth bucket that Vishesh spoke about maybe come in the private side of the market. Are large opportunities coming up in that bucket? And I mean, I heard you guys, one of you say that you also, I think I heard you, Mohit, say that you also look at the runway of growth and give due importance there. Do you believe this is the start of some of those opportunities? Because India's kind of really started making some rapid steps there only in the last 10 years, not necessarily before that, maybe even the last 5 years.
Absolutely. I think both from necessity and equally importantly, recognition of it, government putting behind its entire weight to drive the energy transition and sustainability. So both the runway is big, consequently opportunities that are emerging, and the opportunities are also reasonably sized. Some of them we do pursue directly, some of them our portfolio companies pursue on their own. So to give you an example, O2, I think Vishesh referred to, is a joint venture between us and EQT Infrastructure, and that is setting up capacities and renewable power. Our portfolio company Sembcorp, which is Singapore-based, which has significant presence in India, is also adding more to renewable power in India. At the same time, we are also electric vehicle in India. We currently have an investment in Ola Electric. So we're trying to do it both via our portfolio companies, via directly, depending on the opportunity. But we do think this is a space where reasonable number of dollars are required and can be absorbed, and absorbed in the right way, which is get to the right returns. So while our ethos is to do right and do good, it's also important to make adequate returns.
Got it. Mohit, okay, gentlemen, last 5 minutes of this conversation. I hope you have that much time. I'm extending this appointment by a little bit. Yeah. So Mohit, come to you. The first 3 points or the first 3 buckets that Vishesh spoke about, pretty steady, straightforward opportunities, well discovered. The last 5 years have shown that in India, a lot of newer opportunities are coming in, some which were not present, the ones that are present in the fourth bucket, some that were always present in India but never had the impetus, be it defense, be it railways. In some sense, sensible investing by infrastructure companies, which make it a more likable opportunity, so to say, which is what explains probably this slew of family offices and pension funds investing into India infrastructure companies, or projects. My question is, within that bucket of things which were either very new or have always been there, but because of a change in policy of the government are getting an impetus, do you guys like something?
No, absolutely. I think if I were to expand your question to, in a way, tech, new age economy, or startups, also, whichever you call them, is also what has emerged in the last few years. And while we started investing in this space way back in 2014, Zomato and Policy Bazaar or PB FinTech were the first 2 investments we made in the space. They have come of age only in the last few years. We have, of course, continued with a more disciplined approach of investing in more subsegments. So health tech, education tech, agri-tech, and so on, because we do believe the importance of digitization. More importantly, we have been positively surprised with behavioral transformation in customers as well, in not just the adoption, but in certain cases, the ability to pay for it as well. So, and it ties in very well with what Vishesh said, which is our digitization theme. And at times it's a mix of both digitization and consumption trends that is playing out very well. It's also a very important point that it rides on the unique India stack that we have, the public good digital infrastructure. And we were discussing on how 1 + 1 is adding up to more than 2 in the case of India. So UPI has, of course, been a phenomenal success, well-known success, but UPI is making the bank data far more richer. Else, I would have withdrawn cash and the bank would have had no view on where I'm spending. Today, now you combine that with the account aggregator, which on a standalone basis was powerful enough, but the account aggregator is now giving you more information because there is more detail of where the money is being spent. So, so that's one, of course. I think the other things which are opening up is Make in India, along with PLI, along with, and again, if you put it together with either import substitution or supply chain diversification, again, an important area, and we're looking for opportunities in that space. So, yes, absolutely. I think these are new spaces as the country grows, either and as a policy is playing its role, it is giving impetus to new subsegments.
Yeah, but just wondering, Vishesh, anything in the Capex side which is emerging as a new subsegment, because everybody seems to believe that even though it is not a private Capex-led upcycle, but just a government-led upcycle, but there is enough legs. This may be in some sense similar to 2003, 2008 as well, and people have different opinions there. But I'm just trying to understand any Capex-related themes which are now coming up, which you didn't like in the past, but now you like?
So I wouldn't compare to the past, but current Capex related themes that we are trying to discover better, understand better, are definitely in the electric vehicle space. There's a lot of Capex that needs to happen in that space, both on the two-wheeler side, on the four-wheeler side, on the battery side, on the supply chain side. So that's one clear area. Second, I would say, we have a warehousing platform with one of our real estate portfolio companies out of Singapore called Ascendas, where we are building out capacities for industrial warehousing across India, and that's greenfield, right? So that's very Capex dependent. And then, I would also say that all our financial services portfolio is driven a lot by Capex, and specifically private sector Capex, right? And we are beginning to see, after a long lull, some green shoots there. So, I guess these are, three specific areas I can talk about, but these are very obvious ones.
No, this helps. This certainly helps. Vishesh, one follow-up question before I ask you guys the final question to both of you. But one follow-up question to this is themes which are in India for Indians. Yes, no-brainer, large consumers, banking, etc., etc. What about Make in India for the world? There is some impetus there too. India started to, in some small way, make its presence felt. Are you guys constructive there, or is the global economy not being in ship shape a bit of a deterrent in the near term?
So I would answer that in two parts, right? I think on the services part, our entire IT services industry, has been created out of nothing, right? And that is, very clearly the engine of the world, right? The software engine of the world. We believe that SaaS, will be a similar space. We believe cross-border e-commerce will be a big beneficiary of that. I think on the PLI side, we've begun to see green shoots in EV manufacturing. We've begun to see green shoots in, electronics manufacturing. And we believe that India has all the capabilities required to be a very successful destination or place of origin of manufacture of some of these things. And so we are, while we are trying to understand these modes better, but I do believe that, being an optimist, I believe that India has the potential definitely to be the, one of the large manufacturing hubs of the world.
But you haven't participated as yet. You scouting the area.
We are small shareholders in Ola Electric. That's we are mostly scouting for more opportunities.
Got it. Okay. Final question, and same question to both of you. Either of you can take it first, but I would just love to understand what is it that your counterparts in different geographies within the Temasek umbrella talk about India with a bit of a degree of wonder, admiration, what have you. I mean, the common points are known, so I know a lot of things would be very common and well known, but is there something that has stood out for you in the last 6 months, which you heard your colleagues in the other geographies say, and which made you think that, hey, maybe even I didn't think of it then? Anything that stood out?
It's a very interesting question.
Go ahead.
Sorry, Vishesh. No, I see. I think we touched upon this. The India stack is unique to India. In fact, it's something that we're actually exporting and globalizing. And real-time, secure, at that scale, low cost or virtually no cost, which lays the foundation for the Indian entrepreneur to come and innovate on the top of it, is something that has amazed people. And I would go ahead and say UPI is not a flash in the pan. UPI and then account aggregator and then ONDC and then there are various other things that between the MPCI and RBI and others have done has been phenomenal. That has definitely amazed our global counterparts. I think the second part is while it was known, because there have been various reform measures taken in steps, and again touched upon it, starting with, let's say, GST, and followed by the insolvency bankruptcy code, which again was phenomenal. The asset quality stress in India was at its peak, and nobody perhaps imagined that you could take the promoters to the court and get those NPAs resolved in a reasonably time-bound fashion. But coming back, there have been a series of reforms, and I think we're coming to see all of that come together, driving the growth. I wouldn't say that. I would say it's created a good feeling or the positive feel among people that yes, India can reform and sustain the reform. It's not 2 steps forward and 1 step back. We are continuing the 3rd step forward now.
Yeah, well, yeah. I mean, in some sense, that's a difference than what it probably used to be. Vishesh, we'll wrap up the conversation with your thoughts on the same. I don't know if there is something, but I would love to hear.
No, I'll just take a slightly different lens to what Mohit said, right? This was pointed out by one of my colleagues that if you look at the history of the developing nations, the spot where they go from $3.5 trillion in GDP to to $6 trillion or more of GDP is the place where the wealth creation is the maximum and the fastest. Okay. Right, and it triangulates quite well with the per capita GDP, also threshold of 2,000, 2,500 going to 5,000, right? So India has, is willy-nilly the, a big driver for global growth today, and I think, we need to live up to our potential, not just for ourselves, but for the entire world, as it were.
That's music. That's really cool. Thank you so much, gentlemen, both of you, for taking the time out and speaking to us, and looking forward to talking to you more often on the platform.
Absolutely. Thank you so much.
Thank you. The pleasure is ours. Viewers, thanks for tuning in.